we'll do with relative strength is we are trying to find out what to invest in. We're trying to identify the opportunities, both for positionals, long term, ultra long term, or whatever it is. We're not trying to look for any security or any asset to sell to short. We're going for long term. It's more easier for that because sometimes what happens is that we'll actually explain along the way. It's easier to understand that way. Yeah, assuming everyone can see the screen and I'm audible, we'll proceed. Whenever a fund manager, a global fund manager or a hedge fund goes into any market in global sense, they go through a top-down approach. So let's say in India's case, for example, I would go Nifty 50 or Nifty 500, and after that, I'll check which of the sectors are outperforming from Bank Nifty, Nifty Auto, IT like Infosys or whatever it is, or Pharma, FMCG. I'll check all of them, and whichever is outperforming, I'll go through individual stocks and select those stocks and put them into my portfolio. That's how I'll generate alpha versus Nifty. That's how I can tell my shareholders or unit holders in case of mutual funds that this is how I outperform Nifty. So let's say if Nifty goes down by 5%, my portfolio is down by just 2%. That's outperformance right there. Of course, in individual's case, you want absolute performance. You don't want negative thing. Yeah, so this is a chart of Nifty. We'll go for long term. Just an example. To see relative strength or weakness, it's basically just comparing one asset to another. So what we do is we put any asset and divide it by whatever we are comparing against. Yeah, you as you can see, it's literally as simple. I put Bank Nifty divide by Nifty. So if this figure trends upwards, that means Bank Nifty is outperforming. If it trends downwards, it means Bank Nifty is showing relative weakness versus Nifty. And the same techniques that you use on price action, supports, resistance, swings, and whatnot, all of that works here. Everything from trends, channels, Fibonacci, everything. So yeah, as you can see, in the long term, Bank Nifty has outperformed Nifty by quite a lot, quite big margin. Don't look at the price thing over here on the right side. That doesn't matter. What matters is it in the chart over here. The only time Bank Nifty has underperformed Nifty is during this COVID thing, COVID crisis, because like if you can see, we still haven't reclaimed this over here. Bank Nifty still hasn't gone as high as this level over here, which means it still has some outperformance left in it, which is probably going to happen this year, I guess. And same way you can see this support over here. Yeah, you can see this approximate support, right? Which was a resistance. This is one of the most classical things. This is classical thing. A resistance becomes a support. So this is what you want to see. Of course, it's log based. Whenever you see long term patterns, long term charts, try to have log based charts. This way, the recent time doesn't seem as if it's too much. You don't overestimate the recent thing, and you don't fall to recency bias basically. So, yeah, seeing this, many people could have predicted that this and this, these are the two levels, two long term levels that people could have predicted, target 1 and target 2. Maybe target 3 somewhere in middle over here. But these are two strong ones basically. And seeing this, you could predict this over here. If we see, let's say, Nifty Pharma, again, I did the same thing. I just divided Nifty Pharma by Nifty with a broad index that is. And yeah, you can see from 2015 onwards, it started underperforming way before price action. This is the price action. And you can see the divergence right here. This is one of the things that you are also watching. Remember, I talked about divergence, market breadth, and relative strength. You have to see divergence everywhere, even in market breadth. So, in this way, you kind of predict before it even happens, you know it's going to happen. And now you're waiting and watching when it reverses, when the bear market of Nifty Pharma becomes a bull market, when a bull run comes. Of course, the fundamental factors of COVID were perfect for Nifty Pharma, but assuming you don't know anything about fundamentals, how would you know? Simple. Using trend analysis either here or price action. So either this one approximately or this one. Okay. You guys can follow what I'm saying, right?
No.
Okay.
Uh, it would help a bit if you would talk about these terms in advance, like what do they actually mean by, like when you're saying divergence and all.
Oh yeah, okay. Divergence is basically when the price action has a higher high, but the indicator, whichever indicator from RSI or whichever else, has a lower high, or vice versa. Even in support, when the price action makes lower low, but the indicator like RSI makes a higher low. That's a divergence.
All right. And when you said that the right side numbers, we don't have to follow them. So, like, can you just tell me what that is about? Like, I'm not going to consider it, but just I want to know what it is.
Yeah, so a little trend is basically one asset divided by another. That
Yeah, I got that, but
yeah.
other numbers.
So because of that, let's say Nifty today is 15,000 something, and Sensex, let's say for example, it's 50,000 something. Since they are not in the same scale, or even if we assume something like SPX, DXY, dollar index, or even gold, 46,000, 45,000, they are not in same scale. So the numbers will not ever match up. There'll always be a ratio from numerator and denominator. So you don't have to see what the numbers actually are. You have to see
Understood.
what this is over here.
Got it. And always comparison should be done via Nifty because it is like the top 50 companies or like
Whichever
should
is
we.
a broad index, you can compare anything to anyone. It basically tells you which one is more stronger and which one you should be overweighted.
All right.
Overweighted in the sense you should at least think of deploying capital. You can do your own due diligence. This is how you can identify opportunities.
Understood.
So let's say it's some bank like Bank of Baroda or something, and you find out that it's actually really good in charts. So you can see the fundamental factors of EPS or ROCE or whatever it is, and you can do your own research. And if it is really good, then you can go for it. That's basically it. But yeah,
Okay.
so in the similar way you do analysis and price action, whichever analysis you want, support resistance or trend analysis, you can do the same thing here. And Sometimes it happens is that the RS little strength is slightly faster than news flow. You would see that in case of let's say RTC, Yes Bank. Like the moment they fell, just before that, you have slight warning signs in moving averages in RSI and in a little strength was in Nifty. I generally use Nifty is because it's a benchmark of Indian economy, Indian stock market. But you can use Nifty 500, or let's say, for example, if I want to use Kotak Mahindra Bank, I want to see which of these banks are outperforming the Bank Nifty index. Yeah. So over long term, you can see Kotak Mahindra, except the towards after March 20, except that until this point, Kotak Mahindra has actually outperformed Bank Nifty by quite some margin. So if you want to see Bank Nifty sector, and if you want to be in Bank Nifty sector for let's say last 10 years or so, you want to be in Kotak Mahindra Bank, one of those top banks. And yeah, except this one. This is what I was talking about divergence. Now you probably want to be lightweighted in Kotak Mahindra Bank until this thing resolves itself.
So
It could
would you consider this as a buying opportunity compared to Bank Nifty? Because like on the right side of this, it is like on very low comparatively. So
if this support over here, if it is tested and if it stands basically in next week or so, yes, it's definitely a buying opportunity. If it doesn't get tested, then you might want to see these supports, or you might not get into buying opportunity for next 5 years or so. That's what happened with Microsoft.
right,
But in the same way, you want to go for top-down approach from broad market indices from Nifty 500 or Nifty 50. You want to go into sectoral indices, pharma, FMCG, or whatever. And from those sectoral indices, you want to select just bunch of stocks, maybe one or two, and the outperformance of those sectors. And you can use this analysis from basically using one stock compared to another. We can see example of let's say Kotak Mahindra Bank itself. Let's say that versus I don't know Infosys. Yeah. So even towards the long term, except for last year or so, Kotak Mahindra Bank has performed relatively well versus an NFI. It's only towards the NPA thing in the coronavirus thing, plus work from home thing, and not to mention dollars. All of these are factors which is why Infosys outperformed and Kotak Mahindra over the last year or so. Since December 2020. So even in this, you can use trend analysis. Yeah, using this trend analysis, you can see this is kind of a sell signal kind of thing, but not in short. But if you have a position, that's when you have to change from Kotak Mahindra to Infosys. So if you have a bunch of portfolio and you're finding out you are looking for opportunities, which of the sectors I should be overweighted, or which of the stocks I should be overweighted. If Kotak and Infi are both in your portfolio, this is a point at which you should consider switching to Infi to be overweighted over the next few months or so. So yeah, I mean, in the similar way, later on this will become a residence of its own. So as this, if or when this trend line is violated right here, you might want to switch back to Kotak Mahindra. It might happen just 2 months later or something, depending on Kotak Mahindra's thing and depending on info also. So when you're looking at trying to build a strategy out of it or a system out of it, or even something like checklist, let's say for example, I want to also see momentum. I'll use RSI. And for confirmation, we can use moving average, simple moving average. Yeah. So if we go back in time, when Yes Bank's fall actually started around August, I think 2018. Yeah, around then. Yeah. Around August, September. As you can see, the price action is having higher high right here, but relative strength is having higher lows, lower highs. Sorry. So there's a divergence, and in momentum also, there's divergence right here, and we confirm this using moving averages. Once moving average turns, the trend of moving average turns towards the downtrend, that's when you want to be really careful. You have to see any kind of warning signs, red flags in company from fundamental side. From technical side, it's basically a sell signal for all intents and purposes. But when I say sell signal, it doesn't mean short signal necessarily. It could mean, but it could also mean that the company is going to underperform the benchmark by quite some margin. So let's say the company is, let's say, 100 rupees and benchmark is 1000. The company might just stay in 100 to 110, while the benchmark might go from 1000 to 2000 or 2500 or something.
How do you
Um,
decide which moving average to choose? Like 9, 21, 50?
Yeah, that's up to you mostly, but I generally use 21-day exponential moving average for short term because it sees the last 21 days of data. That's approximately 1 month of trading days, not including Saturday, Sundays, or anything else. Approximately. For long term, people generally use 200-day, which is close to 252 trading days in a year. And for about 2 months, 3 months, they use 50-day moving average. Depends on your timeline.
Okay.
um, so I have a question regarding the Kotak Mahindra and Infi pick that we did, right, like 5 minutes ago.
Mm-hmm.
So assume if I have 100 rupees, right, and I have split it in 10 stocks in my portfolio,
Mm-hmm.
and two among them are Kotak and Nifty, right? Sorry,
Yeah.
Kotak and Infosys, right?
Yeah.
So when you said I should move my Kotak to Infosys because of so and so, do I have to like take all permutations and combinations out of the other 8 stocks in my portfolio as well? Or on what basis did we just choose Kotak and Infi from my existing portfolio of 10 stocks?
No, I'm just assuming that it's Kotak and fee. But yeah, it's better to have all permutation combinations. This way, you have a lot of people use fundamental factors to find out that okay, in large cap sector, I'll use 65% of my portfolio because of that my risk appetite or whatever. And in small cap, I'll use 20% of just 5% of my portfolio. However, sometimes large cap becomes small cap and small cap becomes large cap. Example could be something like Asian Paints, something like Yes Bank, how it became from large cap to what it is now, whatever it is. And yeah, even ITC, how it has fallen the market cap and both price and market cap has fallen since its bull run in 2017. So in this way, you kind of know which are not performing very well, and you kind of identify the winners before actually investing in it. The main goal of any fund manager or any individual is to ride a trend for long term. I'm talking about long term. In short term, you can go against the trend, which is kind of risky, but you can still go and make money. But in long term, it's best to stay with the trend. So we can take an example of Japanese market like Nikkei, which was in bear market for a very, very, very long time, some 20 years or so. So for that market, you don't want to be long in many stocks. You can use a little strength to find out which stocks are going against the market and bet on them, which is all well and fine. But you want to basically you don't want to buy the ETF of Nifty Nikkei 5, Nikkei 225. In Nifty's case, we haven't seen prolonged bear market yet. So anyone who bought ETF since 96 he's doing very well for himself. But once we all of a sudden get bear market or something, the way it was in 1929 in US for 12 years, I think, it'll be tough to identify the stocks which are going up. And you always want to trade in favor of trend for long term.
Makes sense. Thank you so much.
Yeah. Yeah. So using this, we can have, as I said, all combinations of every stock in your portfolio or every sector in your portfolio, including if it's commodity. Let's say I use gold versus Nifty. Okay, give me a sec. Okay, so this works. Yeah, so you can just use this one, but don't try to use RSI of this graph, gold divided by Nifty of relative strength. That's no point of that. You want to use RSI of actual gold instead of this. Yeah, as you can see, from November 2019 to March 2020, this is the kind of outperformance that you want to have. There have been many signals, buy signals, when, for example, gold hit this high over here. It's been in correction for last 3 or something years, 2.5 years, and this high over here, which it has been in correction for many, many years. So these two buy signals, when they basically tell you the shift from bear market to bull market of any asset, and that's what you basically want to do. As Nifty was falling, gold was rising up until just one point. When you see it starts falling down, this is a classical Dow theory, lower lows over the 6 months or so. You want to become lighter on gold unless it's physical gold. You want to be lighter on gold and be more heavier on Nifty or Bank Nifty or whichever other equity stocks that you want. This way, the majority of trend, basically the biggest trend in Bank Nifty started in October, that to around third week of October. You still captured that over here. In a similar fashion, you can see, let's say, Bitcoin versus Nifty. If you want to make a decision between these two factors, these two assets, yeah, ignore those lines. So this is basically the saucer pattern of Bitcoin versus Nifty. As this pattern goes trends upwards, you want to go more long on Bitcoin compared to Nifty, and as it goes down in a similar fashion. So yeah, as you can see in a similar fashion, you can use Elliott waves and whatnot just on this graph. And yeah, so ABC. In a similar fashion, you can see the same pattern occurring, and especially if you are in a volatile asset like Bitcoin, you want to have a very strict trend line. So if it goes in consolidation or goes downtrend, this should be your stop loss right here. Using manually, it's fine. And again, whenever you do relative strength analysis, that is one asset divided by another, ignore the right part. That doesn't matter. The 0.1, 0.5, whatever, it doesn't matter. This is what you are looking at, the trend. We can use something called RRG, relative rotation graphs, to make everything more simpler. The only difference is RRG works mostly in short term, and this works in all kinds of, from swing trading to ultra long term. Yeah, you can see in my screen, right? Yeah, so this way, I'll first explain what it actually is. So RRG is basically all of these charts rolled into one. It's for short term, as I said, and, and these quadrants, they're lagging, improving, leading, and weakening. The ones in leading are outperforming the benchmark. Benchmark is right in the middle, NSCI, Nifty 50 index. You can put anything in benchmark. If I put, let's say, yeah, if I put RTC, so all of a sudden versus RTC, all of them are leading. You don't want to be RTC anymore now. Yeah, anyways. In this way, instead of going through each and every chart for short term, this is what I'm talking about, short term, not long term. For long term, you still have to go through charts. For short term, you can see RRG right here, and you can figure out that this is Nifty Bank, Nifty Auto. I want to not touch that for at least for now. What you're looking for is change from one quadrant to another. The example would be Nifty Pharma, FMCG, and IT. Just a few days back, they were the ones underperforming. So as soon as they start changing the quadrant, that's when you, this doesn't generate buy signals, it generates what's called watch list. Now you start seeing those stocks or those sectors in your watch list and observe what they're doing in the individual charts. do your due diligence using fundamentals, technicals, or whatever, and have your own system. But this basically tells you what to focus on, and what in this case Nifty Bank is changing from leading to weakening. You know, the relative strength is kind of weakening, as we saw in the chart actually. Same with midcap. Midcap is actually quite strong.
So, in the last time frame, right? So, is it a good assumption or conclusion that I should exit Nifty Bank and move to Nifty Metal, maybe?
It doesn't necessarily mean exit, because remember, as I said earlier, underperforms doesn't mean it will go down or something. But the other people, the other sectors, or the benchmark itself might increase in a faster rate of change compared to Bank Nifty in this case.
Right. So basically, it translates to better value for money in the short term.
Yeah. So let's say if you want to do SIP manually, and every month you are seeing this chart right here, and seeing this, you'll be like, okay, in my bank sector, maybe I should skip my SIP this month or this week or whatever, and put it in my pharma or in my Infosys or in my TCS sectors or in my FMCG if you have RTC, HUL or whichever. Maybe not RTC at this point, as we saw, but other FMCG based stocks. Malco is doing quite well for itself in this week. So, yeah, even Nifty Metal, back when it was in improving, back in when it was improving, as it changes its quadrant, you want to look at it. This was around 1 month ago or something, somewhere in Feb. So in the Feb month, you probably want to put your SIP into that sector. With just an example, of course, because Nifty Bank still, Bank Nifty, as we saw earlier in the recent chart, it still has some ways to go before it becomes completely not so good, at least for some time. So it will eventually come to improving and will come to leading eventually, the way it was back in October and even July, even in Jan, I think. Yeah.
Uh, so this can also be used to identify seasonal trends, right? Like
Yeah.
there are cyclic stocks.
For seasonal, I would prefer some other indicators like seasonal indicator or Fisher transform, any other commodity based indicator which shows all kinds of season stuff, all kinds of cyclical stuff.
Okay, thank you.
Isn't this also cyclical, the rotational graphs?
Yeah, almost everything in the world is kind of cyclical, has cyclical thing in it.
Yeah, so every quadrant will go under all the, every sector will go through all the four quadrants over a period of time, right?
Yeah, generally it does. Generally, it outperforms
Okay.
Nifty at some point, especially in a unique bull market as this one. The 2020 bull
Mhm.
market is very, very unique in the sense that every sector is performing. And this is why many people, including myself, have this kind of bias. We are kind of spoiled. Whichever stock we are touching, it just goes up eventually. If someone put his life savings, let's say in SBI, back in July, even if it didn't work for 6 months or 8 months, even when Axis Bank and ICICI have worked, SBI still worked in January, February. So yeah, every stock is basically working in this bull market. It's a very unique bull market. Every sector is working. There's a healthy sector rotation over the 2 months, 3 months period.
Okay. So every sector which goes under all the four quadrants is considered to be a healthy sector.
Yeah.
Okay, thank you.
Hi, I just have a doubt. Different lines have different slope, right? So does it indicate that the higher the slope, the greater the potential of that particular market or particular stock?
What you're looking at is change from one quadrant to another.
Right.
This
There are multiple changes here. So I'm just asking whether the slope of the curve has any say in which should be chosen. For example, in this particular graph, let's say HCL Tech slope is quite straight, like horizontal, but for Britannia, it's like more vertical in nature. So would Britannia overperform HCL Tech? That's what
It
I'm
does,
trying
but
to.
it does. It's kind of misleading because what it shows is
Mhm.
how they're doing right now. This graph cannot show the future. Britannia very well may just turn from here, make a U-turn, and go to its lagging counterpart. That may happen. That's what I'm telling you. You can use this for identification. Once you identify, you have to see the individual charts. That might say different story altogether. If they don't confirm,
Right.
yeah. If you don't confirm, then just ignore this chart. Every indicator has to confirm each other. That's when you have the whole story. We'll go through market breadth after this one. So in market breadth, we usually use indices like Nifty 50, or in our case, I'll use S&P 500. But anyways, I'm going ahead of myself. For now, what you do is you want to identify which stocks you want to go right now in this month, in this week.
Right, right. Okay, so one more question, just last question. Would you say a good entry or good buying opportunity would be from lagging to improving or from improving to leading?
Again, I said you want just those names of stocks and
Mm-hmm.
seeing those individual charts. That's when you see the real opportunity, the real targets. If they're making some patterns like triangle or rectangle or double top or double bottom,
Mm-hmm.
you see those patterns, and using those patterns you can put in your target stop losses or any other kind of techniques like Elliott waves, fib, anything else, or even GAN. My point is just using this chart you want to identify which of the stocks are doing well now. This way, out of all 50 in 50 universe over here, like you can see whatever is below this line, I'm ignoring, including HDFC Bank or whatever else. I'm ignoring right there. Even SBIN, SBIN, the intensity of the outperformance is directly proportional to the distance in this graph. So you can see SBI, it went as high as this one. Same with Tata
Right.
Motors. It's very far away from the center. So let's say I'm trying to find out which stock I should go in right now. I'll ignore all of them, all of these people over here, and I'll
Mm-hmm.
see these people and them. So let's say I take Britannia and HUL and stuff like that. Using Britannia as an example, I'll go to its charts, and seeing this, I'll see that it was in a correction since July. Even for this, I'll use my own thing. Let's say I'll use Fib, for example. Yeah. So 30% has already been retraced. That means it's a proper bottom right here. And this is a nice stock for going long in. If you're doing SIP in Britannia or positional trade, it's a pretty good trade with price here, stop loss, let's say over here, and target at least here. If you're using extension, it would be more than that. I'm just giving an example. Of course, all of this is
Right.
not a trading idea or anything. It's education purpose and all of that.
Thank you.
Yeah, so it's already been 45 minutes. Let's go straight to market breadth then. No one has queries in relative strength, right? And RRG.
No.
Alright.
I guess I'll need some time to process this and then I might get back to you.
Yeah, this is actually like too much info to process in a single session.
Yeah, it's kind of heavy. So no worries. And like you can always contact me on Discord and stuff.
Yeah.
What you want to do is you want to go through, let's say, Nifty value 20 and check all 20 of those charts over the next week or so and see how they are doing.
Hmm.
And
Okay.
you do all of this kind of trend analysis and find out which of the sectors will perform next or which of the stocks will perform next in the next few weeks, months, years, or whatever.
Okay.
Yeah, so this is a chart of S&P 500 daily chart. One of the easier ways to find out market prices, you want to find out how many percent of stocks in the index are above the 15-day or 200-day moving average. If there are more and more stocks over the 50-day moving average or even 200-day, that means the bull run is confirming the bull run. And the market is probably going to go higher and higher until it doesn't. And vice versa if there are more percentage below 200-day moving average. So yeah, we can see over here the stock market, the S&P 500 index has made higher high from Jan to Feb 2020. However, this one has made a lower high. That means there are fewer stocks making, there are more stocks basically going below 50-day moving average, single and simple moving average basically. This is a divergence as I said earlier, and this basically heralds a crash, either a crash or correction, one of them. In this case, of course, we know it's a crash. Earlier, it just means that you probably want to get out of that. For swing traders and day traders, it means you probably want to go short. In a similar fashion here, you see there's a higher high until 16 Feb, and the indicator had already started making newer lows and lower highs. And this was basically the high of the indicator. You had plenty of at least the people in the US had plenty of warnings that market might turn and this might actually happen.
Can this be done for independent sectors also? Comparing the Nifty to all the stocks in Nifty and same way like for suppose for an IT index.
Yeah, you do it for your indices for broader market.
Hmm.
The broader market, the
Okay.
more number of stocks in it, the more accurate it will be. So in this case, S&P 500 is fairly accurate, and Dow Jones Industrial Average is not as accurate because it's just 30 stocks right there. 30 stocks might go
Hmm.
above and below, and it kind of feels as if it's volatile. When in reality, it's not as volatile. In S&P 500 or Russell 2000 or Russell 3000, even Nasdaq 100, it's easier to see these kind of things.
My question is probably an extension of the last question.
Hmm.
Can the same be used for trading options on indexes on intraday, maybe?
Yeah, because here, for example, in this case, let's say we are over here, and the index is already making higher high, but the indicator is making lower highs. So you know the market might swing anytime now. In next 2, 3, maybe 5 trading sessions, basically 1 week. Within 1 week, it's going to go down. So what you want to do is you want to see early warning signs in hourly and 4 hourly sessions. You see, this is 1 day session over here. You want to see hourly and 4 hourly price action sessions, and once they break their crucial support levels or trend levels, you want to think about going short in it, either FNO or whatever. Once you see this actually happening in the daily charts, let's say over here, somewhere here, so you want to be short properly. That's when you want to actually go short in it because this basically gives you confirmation, and this is kind of higher confirmation, and that's when you start finding out what would be the target in case of, let's say, futures, because options have weekly expiries and stuff. Here's one level that we have identified using Fib. Just an example, of course. I don't really trade SPX. Until this point, you probably want to be in this zone, not point. Until this zone, you want to be kind of short in the index until either you meet your target or you want to let the profits run or trading stop loss, which is more comfortable for you. That's what you probably want to do. In a similar fashion, there are many other market breadth indicators, for example, trust indicator and whatnot. And using advanced decline lines, let's say you don't have access to such a charting software, or you don't even have, you only have data, market data from NSC. What you can do is using spreadsheet or using Google Finance, you can note down all the stocks on Nifty 50, for example, and just see which of them are higher than the advanced decline lines, for example, advanced declines. So which of them are higher versus which of them have declined. And using the chart feature in your Excel, you can make such a graph from this data. This is the data you'll have: number of advances versus number of declines. It will this was the and using the charting you try to get this one. And yeah, even this one shows the similar picture from 25th Feb onwards. As this is making higher highs, this one is not making higher high. And there are more scripts, more stocks declining compared to advancing.
So market breadth helps you for long-term analysis, or it has to be long-term analysis, right? Or let's say mid.
It's more for short term to mid term because it tells you the strength in the market. If there are more stocks performing, the more stocks running, the market Nifty or whichever is SPX in this case will be it will be trending up. If there are more stocks underperforming, let's say if Nifty, for example, which is a better example in here, if HDFC Life, right, HDFC and HDFC Bank and Reliance, if they are the only stocks which are if they are performing, rest everyone is declining. The moment these stocks stop performing, Nifty will go down. This is the
Okay.
logic.
Sorry to interrupt, but can you just take an example of your Indian market, compare Nifty to everything? It would be better to relate.
Yeah,
If you can, just of course.
yeah, I'm trying to explain the concept behind it because in this charting software have the charting software doesn't have a thing for data, bread data for you don't
Okay,
have
sure.
bread data for these ones over Nasdaq and Invest, which is completely
All
fine.
right.
You can make your own bread indicator in spreadsheet, for example,
Mhm.
and even in CNBC, if you watch in the morning, they'll show advances and declines in NSC. So if you just want to note down that or NSC website there it's available, you just want to note that down and make a graph like this in anything spreadsheet or whatever. You'll see such kind of graph over here, and you kind of compare that with price action of Nifty. If Nifty is going up and your graph is going down, is trending downwards, then you want to look closely into Nifty and you want to see, you want to watch out for swing trades or like short trades, or even vice versa. Let's say, yeah, let's say over here, as SPX makes higher and lower lows, the indicator here has kind of stopped, has plateaued down. So in this part, you are very close to catching the bottom. A lot of people start catching bottom here and here when they are still not sure that it's a bull market or no. But in your case, see, In your case, this is where you start catching bottoms around this. So sure, you have missed this part. The bigger picture is still yours. The big trend.
Mhm.
This is what trend followers do anyway. What value investors do anyway. They want to capture the bigger picture. They don't care if it's if you instead of buying at 50 rupees, you bought at 60 or 75. What makes sense is that from 75, you sell at 200, 275, which is what kind of happened here. Yeah, I mean, we went through quite a lot of things. If you have any doubt, just fire up. I'm also available in Arikaji and whichever other channels we have.
Do you have an Excel version or something or similar analysis that we
Sure
can
thing, man.
just
Thanks.
have to take a look around?
It's not updated for last one and a half month or so, but I'm trying to make another for Trading View. I still can't figure out how to get 50 stocks or something from the sources. Once I figure that out, I'll make an indicator and make it open source or something.
Yeah, that'll help immensely. Thank you.
Okay. Thanks.
Yeah, just focus on charts and whatnot. And if you want practice, just go through Nifty 50, Value 20,
Yeah, that's what I'm gonna do. Thank you.
and yeah, just check that versus Nifty or that versus Nifty 500. Or you can select your own indice and just find out which stock will you should invest in right now, such that you'll outperform the benchmark. And yeah, and using fib extensions and fib retracement, you can do all sorts of stuff. Actually, what you want to do is there are many people who are dependent on mutual funds and even ETFs. All of India investments have put their money in Nifty 50 ETF or index funds. So to outperform them in just 1 year, you use something like little strength, you get 30 to 60% of your target in just 1 year. That's really good. You have basically outperformed them by about 5 times, 6 times.
Okay. This is quite a lot of information, which is
Yeah,
basically new. So yeah, I'll need time. I don't know if anybody else has doubts. I'll have to work this through and then get back to you.
yeah, sure. I mean, if needed, we can do some other session, some other time or something. We can work it out.
Yes, you should take a follow-up session like after 2 3 days or something.
Yeah, whenever there's free time or something, free day, maybe next Saturday or whichever, I'll
Yeah.
try to do that. I mean, I'm aware that kind of is very heavy. It took me around 4 or 6 months to properly grasp this concept. So yeah, I'm aware. Just practice a lot, and this will become a second nature to you.
Like
All
try
right.
going through this for the next days or so, and then we can have a follow-up session.
Yeah. So yeah, let's wrap it up.
Yeah, cool.
Yeah, sure thing. Thanks.
Thank you.
Thank you.
Anytime, my pleasure.
Thank you so much.
Always my pleasure. So when we think of little strength, we are trying to find out what asset we are supposed to deploy at least part of our capital in, either for swing trading, positional, even for long term. In my case, generally when people from buy side, that is mutual funds and hedge funds, when they decide where to put the funds into, which asset or which equity or which market, they generally go through this step by scenario where they go through one of these indices, either ACWI, All Country World Index, MSCI, or emerging and frontier markets. Generally, very few funds and all go towards frontier markets of like Vietnam and Bangladesh and stuff. This is the broader universe. Yeah, so this is kind of the broader universe when it comes to global fund managers. The fund managers who want to play it safe, they're conservative, they'll want to go towards this. They'll go towards world index and developed economies like Nikkei, like SPX, like Germany. Oh, okay, give me a sec. It's not visible.
Just for confirmation, the stream isn't working properly, right?
Oh, it's not visible. Okay, I'll just try again.
Yeah, it's visible when I click on his name in the small screen. When I click on the actual watch stream, it doesn't show up.
It's working fine for me.
Yeah, I'll just reconnect. Yeah, can you guys watch anything?
Yes, it works for me now.
Yep, we can see it.
Alright, yeah. So yeah, as I was saying, generally when hedge funds and mutual funds, global mutuals included, who have got the freedom to invest all over the globe, they generally see into in this universe. So they compare different indices all the way from DAX, German DAX, Nikkei, SPX to emerging markets such as Brazil, BOSPA, Nifty India, and KOSPI, Korea, or even China. So yeah, and the fund managers who are more conservative or who are just domestic, this is kind of the universe of investing. These are stocks that they have to pick in. So they'll use this tool or little strength to just go through these, not just indices, even the sectors, financials, industrials, transport, even metals. In most of our cases, it's mostly this. So in most of cases, this plus SPX in case of mutual funds. So what we have to do when we pick assets is that we have to compare assets to either Nifty Sensex, Nifty 500 or whatever, or to SPX, because we also have Motilal Oswal S&P 500 index fund, which is also our universe. So this is what we have to compare. Whenever one of them, let's say Bank Nifty starts outperforming S&P 500, for example, we'll start looking into Axis Bank, ICICI, or even SBI. In a similar manner, we'll start saying, let's take an example that Bank Nifty has started outperforming S&P 500 and even Nifty and IT and Auto, and it's poised to become the highest performer of this year. Let's say we are trying to find out which is the bank which would outperform Bank Nifty. Would it be Axis, ICICI, SBI, HDFC, or Kotak? What we'll do is we'll compare this ICICI versus Bank Nifty, or Axis versus Bank Nifty, or Axis versus ICICI. Whichever of them are outperforming the Bank Nifty index, that's the one that we have to select, either for swing trading, positional, long term. However, your risk factor and whatever comes in. So we'll take an example. Let's actually go through from Nifty. Generally, people skip MSCI and all of this stuff. They just go through DAX, Nifty, SPI, and whatnot. For example, this is the chart list of one of the leading technicians in the world, and once a month, he goes through all of these indices all over the world. So he skips the world index, the EM index, and whatnot. He goes directly to these indices, the country indices. Yeah. So let's actually go through Nifty and let's check which of the sectors are outperforming Nifty. So you can see the Bank Nifty has been on an outperformance since 2016 or something, and all of a sudden dropped due to COVID. That level hasn't come yet. So there's still growth till there, all the way up to there. Using this, using Fib and whatnot, you can see how much growth is possible. So Bank Nifty is one of the candidates that's really good for long term at these bar charts. So this is the level that you're watching. What you're watching for is this was the earlier resistance which became support zone way in September 2019, almost 2 years now, 1.5 years. So what you're watching is this level over here. Once this level gets taken down, then there will be another bout of outperformance for a few months or few weeks, and that's the kind of move that you want to capture.
Excuse me, can you put up Bank Nifty chart on the above panel? We're watching Nifty 50. Sorry.
Yeah. So this is Bank Nifty. Although the price action has gone over the COVID high, pre-COVID high rather, versus Nifty, Bank Nifty has still underperformed. It still hasn't gone towards what it was earlier. So there's still room for improvement. There's room for targets, and you can see after some hesitation here from May to around September, August, September, Bank Nifty has been outperforming Nifty by a quite nice margin. These are the outperformance. This is what you want to capture in future. As soon as it reaches this level over here, you want to probably capture this move. And once it breaks out, it's probably going to take down this level also, right here, just as Nifty has done it in its price action, and just as Bank Nifty is continuing to do it. So right now, you can see Bank Nifty is going through this kind of congestion phase or accumulation phase, where after these two bouts of underperformance, there's some weeks or months of consolidation. This is where you want to accumulate your own portfolio. In case you have any banks in your portfolio, this is the time you want to accumulate, because when this move starts over here, half the move is already gone. You see, half the move is gone just in 1 week. All of these candles are 1 week, so this move is 2 week move. The person who accumulated over here in the accumulation phase, he is probably enjoying corridor. In a similar manner, we go through every index, including Nifty Metal, Pharma. So you can see that even in long term, Nifty Metal has been on a underperformance since 2018, since even before that. Except some bouts of overperformance in round 16 and 17, it has been in continuous underperformance. So you can see as this chart over here clicks on various resistance lines from here. As it clicks on these three resistance, for example, or support earlier, the overperformance just keeps on increasing. And this is kind of unique about this bull market, and all sectors are performing very well. But even Nifty itself, all sectors are. And especially considering that Nifty itself is performing very well, this overperformance basically means that anyone who invested into just ETF, Nifty ETF since the crash, he has been underperforming versus a person who has only been investing in, let's say, Tata Steel or something, or JSW Steel or something, or even Hindalco. Copper has been doing very well recently. So in similar manner, you want to see different resistance and supports, or even different trend lines. So this is also very interesting thing to watch, as this trend line and this price action here, relative trend rather, touches this trend line over resistance and breaks out and has a pullback. That's a really good sign to watch for. That shows that there's an inherent strength in this rally, especially when it's versus some broad market, which has got very little to do with metal itself. This basically means that the metal industry is outperforming the various other industries from pharma or banking and whatnot. So seeing pharma again after his really big bull rally from 2010 to 2015 or so, it's such a big bull rally. It came in a bear market kind of thing. Yeah, it came to bear market, which went on for about 4 years or so until end of 2019 December or something. So for such industries, what we want to do is we want to look at the next support, the next resistance, especially to find out when is the next bull market coming in. So in an example, there are many false signals that you'll see. See, this is an example of false signal. For this, you'll have to use the trailing stop loss or use some other studies which shows you that momentum is weakening. For example, RSI or which others, even instead of CNX 500 as Nifty 500, you put it versus some other industry for banking or for just pharma itself. Yeah, let's say it's in a bear market and it's around here, and you think because of these over here, you think it might bounce off, and you think I might take position here if it bounces out, that is. So you wait for it. It doesn't bounce off, and you're like, okay, maybe not now. When it does bounce off, for example, right here, let's say there's a resistance here, and you're like, okay, if it bounces off this level, I'll buy. And it does bounce off for a bit, for about 2 months. So here your trading stop loss should hit. So you'll still be in profit, but you are kind of not so correct because bear market didn't end yet. There's still 2 years left in the bear market. So, seeing different resistance, you'll change your resistance and from here to here to here, all the way to here, the support line. And once it breaks out here again, more decisively in Feb, you'll enter again, and you'll probably want to be there for long term if you want to be for long term. For swing trading or for other kinds of position trading, you'll watch for relative weakness. For example, in this case, there's a double top over here. That's a relative weakness. Nifty started getting stronger versus the broader market itself, Nifty 500 in this case, started getting stronger versus pharma. That's your cue to leave restraint. Although for now, you want to watch for more support levels over here and over here. If they're not broken, then pharma is up for a bull run. Probably as massive as this one, who knows. But if there's another bottom over here, or even over here, you want to look for another trend line. So assuming it is the bottom, I know it's not the bottom, but assuming it is. So whenever this trend line is touched, how many times is that? You want to accumulate more and more of a pharma portfolio as the time goes on over the next few years until something like this happens. So you can see over here, seeing the price action of Nifty Pharma versus the relative strength. As Pharma still goes, makes top right here, makes a kind of a saucer shape over here. Relative strength already started weakening versus the broader market over the next few months. And that's when you want to look out for other sections of a portfolio, constructions or banks or whatever else. Alright. Now we'll go to some questions.
So let's say that I have Dr. Reddy's lab with me or whatever, and like at the peak, I see that this thing is flattening out. If I want to sell, what all steps would you do? Not an advice, but what all things would you look for? And similarly, if I want to re-enter once the trend, like there are some fake signals, let's say if there is a fake signal, how do we plan our exit? And if there is a actual signal, how do we make sure that we don't exit?
Yeah, you use various different kind of indicators. Basically, not just little trend. You want to see RSI. You want to see other sections. As we'll actually go through some other example. Let's say Dr. Reddy. Yeah. So as this thing is going up, the price action is going up over here. Give me a sec. Yeah. So as the price action is going up, this thing is plateauing out. Yeah, I'll try help you out. Anyways, yeah. So you see, let's take an example of moving average, something as simple as that. Yeah. So let's say the price is going up and you're very happy, and even I'm very happy that my portfolio stock or whatever is going up. However, this is actually coming down. This is in a rectangle consolidation area right here, all the way up to here until this it breaks the support over here. So it breaks the support over here in price action, and it just collapses. In a similar vein, the RSI, the momentum indicator, has made a high here, and it fails to to sustain the oversold zone. So overbought, yeah, plus 70 zone. So when it starts failing that thing, and you're like, okay, maybe this is not so good. And you also have to observe that while price action support level, the support level over here, momentum has completely fallen into oversold. It went as low as 20. Yeah. So that's this is not such a good thing for RSI, because that means people are putting their money away from Dr. Reddy into some other sectors or even into bonds due to inflation or whatever. And this is also what we want to see is that, just in price action, this is kind of important level for the stock, because there was a resistance here which became a support as a pullback, which couldn't bear this, and now it's becoming a resistance. So this is a level that you want to watch out for. In relative strength, as relative strength goes lower and lower, you want to make your resistance lower and lower. So right now it would be somewhere around here. So this would be level that you want to watch for in relative strength. As RSI makes higher highs before price does, you want to start taking position for positional trades into this. For swing traders, you still want a confirmation from either moving average or price. Moving average at this point, the 20 moving average, has become a resistance since 15 Jan. Earlier it was a support. This is one of the 3 check marks that you can see. You can look for it in any company. Whichever company wants to go down a cliff or something, this is they'll show moving average, the change in moving average trend, relative weakness versus the broad index, and losing momentum. These are the 3 things that you always want to see. It usually happens before price, generally before price, and sometimes in case of Yes Bank, it happened before news flow. Most of the news of Yes Bank came in like September or something, September October of 2018. These 3 things happened back in August, early August of 2018. Of course, at the same time, it's hindsight thing. I had burned my hands back in the day, back in my Novus days with Yes Bank. So analyzing using technical analysis, I had this kind of hindsight bias. But for foresight, this is what you can see. And for resistance also, you can see these over here. So as price action threatens to go lower and lower over here, especially in this congestion area. You see that over here in little trend versus broad market, the support has never been broken until recently, that is 2017. Until then, it has not been broken yet. So if support hasn't been breaking, the recent support especially, you don't have any reason to liquidate your portfolio. Because that basically means little strangers means that Dr. Reddy Lovich's stock is outperforming the benchmark. So you want to be in a place where the benchmark is underperforming you. You are finishing faster than the benchmark in that race, so to speak. Yeah.
Can we guess breakouts with this as well? Like recently, Saregama had a 40% breakout in 1 2 weeks. Let's see what the indicators show for that.
Which?
Saregama.
Yeah, so
And one thing, what should we compare Saregama to? Like Nifty 50 or 500 or Nifty Entertainment if there is any?
yeah, you can go with Nifty Entertainment if you want to.
Okay, I see. I want to perform Nifty 500.
Yeah. By default, even I select Nifty 50 or 500 because generally, when I want to look at my mid cap portfolio or my small cap portfolio, I generally watch small cap Nifty small cap FT or 100 or Nifty mid cap FT because that's the benchmark I want to outperform. That's the mutual funds I want to outperform. Instead of deploying my capital into mutual funds, I have this tool which can tell me that the benchmark is right here, and these are charts which are outperforming the benchmark. I want to check the fundamental factors that making sure that the company is debt free or whatever my fundamental criteria is. But my primary criteria is that the company has to be outperforming the benchmark because that's how I'll have a greater wealth over next 5 years, 10 years, 15 years, and 25 years, so on. And good old compounding. Yeah, and Sarigama. These are kind of levels that you want to watch out for. You might think it's hindsight, but if you look at it, it was support earlier. So once it's broken, you probably want to stay out of the stock for a bit. And once there's a breakout over here, see there are two false breakouts, so no real breakout. You are not in it yet. You are in it when this is broken out over here. For sure, it starts supporting the not a price action, the little strength. And after there's a resistance here, there became a resistance here in November, which also got broken now in Jan. When resistance are breaking out one after another in few weeks and months, it's a really good sign, really good momentum sign. So this is your accumulation phase basically. Sure, market is going kind of higher and lower and stuff like that. For positional trader, doesn't matter. By the time it still will have some accumulation over here. So by the time this happens over here, you want to be accumulating in this phase. And you can see in a similar fashion, moving averages is in a uptrend, showing that in a short term or intermediate wave, the stock is in uptrend. EMA, 21-day EMA. I usually use 21-day exponential moving average because it shows last 21 trading days, so around a month's worth of data, approximately. For positional, this is generally good enough. If I want to be positioned for months or 6 months or so, I'll probably go for 53-day or something exponential moving average. So And you can see in RSI what happens is that in an uptrend, there are more probability of RSI staying about the 50 or 40-50 region, and downtrend, like it was over here, there was more probability of RSI staying bottom over here. So in this trend, when RSI is kind of oscillating, just these two band, that's it's a consolidation sideways market. Not many people like sideways market. So, yeah, as it becomes a support over here, the RSS becomes support here, you start getting more and more convinced. All of this becomes more easier once you have more experience with charts. You'll start having feel for the market, like a subconscious feel. So as you see, there's so many supports happening over here with a failed breakout over here, breakdown more like. And yeah, you start getting more of a feel that we might be seeing breakout somewhere over here. Of course, the real breakout is 12th March, but this is what you would be feeling like. So you would be, this is what you want to target. You want to target around 20th Jan. So that's what the charts are telling you. In hindsight, that we can see that, yeah, sure, because of this support over here, that there is also this breakout. But when we are right in the middle of storm, when we can't see the future over here, we can't see breakout. We can only see resistance over here and the slight support over here, which shows us, this breakout is in near future. And for long term, of course, weekly charts. Yeah, so this would be our like resistance and under resistance right here. Now it's in a quite big bull trend. This is kind of what we are aiming for, or what you're looking out for. If it does get broken out and with a retest, pullback or throwback, you probably want to get into this action. Yeah.
So, in a broader sense, which index is better to compare to, Nifty 50 or Nifty 500? I've been really confused about this.
By default, you can go for Nifty 500 because it shows the broader market. Remember, Nifty 50 has just 50 stocks, which is through market cap, free floor market cap. HDFC Bank and Life and everything else of HDFC Bank, except AMC, I think. So, and
Okay,
you
so
also
by
want to think
default,
about,
55.
yeah, you can go for 500 by default. No worries about that. And if you are watching for small cap and mid cap, you can go for Nifty mid cap or small cap. It's basically up to you. Let's say you have got all blue chips in your portfolio, and you're watching for market in case mid caps are outperforming the blue chips. So you'll bring up your mid cap. In fact, instead of saying, I'll show you.
Hmm.
Yeah. So when you start seeing outperformance in mid cap, that's when you start being overweight in mid cap in your portfolio. Over the long term, though, the large caps, the blue chips, have outperformed mid cap. Yeah, so midcap has been, there's this resistance line over here, which midcap just can't break out. Once it starts breaking out of that, and you can see this bear market over here, like mini bear market, not actually bear market, but kind of where mid caps have underperformed Nifty from 17 to December 19. These 3 years of underperformance is basically a down cycle, and up cycle has just started. The mid caps are a lot of mid caps are actually outperforming Nifty. In my own portfolio, my large caps haven't gone as far as mid caps have. They have like double and triple compared to large caps, which are like just 50 or 75% up from the COVID lows. That is. So you're watching for this over here. Once this is completely and totally broken out of, like this over here is kind of a small false breakout in hindsight. Once you are sure that it's not a false breakout, you start acclimating into it and looking for the next breakout. Yeah, even in this Nifty midcap 50s index, you can see how it was on a downtrend, kind of downtrend since Jan, and after COVID, it has way more than double. It went as low as 3,000. It's almost 7,000 now. So, yeah, even midcap 50, you want to find out which of the stocks are outperforming this index. You want to be in the outperforming, not the sector, the outperforming stock. That's how you select the stock you want to go in, and that's how you select when to go in, using these breakouts and using these trend lines, or even fibs. Yeah, so back to questions. Avenue supermarket charts that I was sent. For when can we set targets based on relative strength? Targets, you can go for Elliott waves and fibs. You can select targets using resistance of these things over here of relative strength. But resistance is basically tell you when to basically tell you when the breakout of the price action is coming in, when the news might be coming in.
Oh, okay.
So for target in this case, I would be going for fibs. Yeah, so your first target would be around 5,700 in this case, and second would be 6,200. And yeah, you can see in both these levels, there's some kind of consolidation in these levels over here.
Can you explain just what that fib chart was? I'm not aware of that. Just small.
Yeah, sure. Yeah, so these fib levels are basically like high probability, but they usually work for, at least for me, they work. In theory, they are supposed to be high probability places or levels at which the price action either stops, reverses, or goes into consolidations, such as this one. So in this case, for example, let's take from here to the low, March low of the stock. So we start from here and here. From 0 over here to 1 over here. The 138.2% of the level, that's your one of the targets. Either this or 161% when it comes to extensions. So yeah, you can see the first target over here has been met somewhere, assuming this price actually met. and you put your go to trigger on 0 or something, assuming that happened, this is when your target kind of met from here to here. That's your 30% in I think 3 days. So your second target would be here, which would meet all the way in this breakout over here. And you can keep doing this for ever. Yeah, so again, your first target is over here, which is met really quick, and your second would be here.
So this only works from bottom to top, right? Doesn't work in the opposite way, right?
Top to bottom also it works. For that, we need more candlesticks because this one doesn't have enough levels to show. Okay, let's take from 17 for example. Yeah, so again, let's assume you know for sure that this is bottom. Let's assume for now, for simplicity. So your first target would be here, okay, which is met in like 4 months or so, and your second, sorry, here, yeah, your second would be over here. So after this gap up over here, your second target is met. In a similar manner, we can check Nifty itself. We'll check the 2020 itself. So because we have a lot of room over here. Yeah, of course, this is just zones. So think of it as like rectangles or crayons, I think. This would be your first target meeting here, and your second target over here, which meets all the way over here. And this breakout over here. And just like that, you want to go for different race lengths and different levels over here until 100%. After which you have to use the extensions.
So, can you open the Jubilant food charts image that I sent you?
Oh yeah.
You told me some. You had something to say about that.
Yes. At least you can higher. However, in the strength, it's in a consolidation phase. So you want to look out for this level over here. It breaks out or it breaks down. Generally, in this case, I think it's going to break out rather than break down. But don't go on mad thinking. Go through those check marks. Think of it as more objective ways.
JBL Foods. Oh, sorry, Jubilant. Sorry, JUBL. Yeah.
Okay.
In the charts, I compared it to Nifty 500.
Yeah, sure. We'll do it in 500.
But I'm just asking.
So in this case, Here's the two levels that we know, and the price action itself is at a support, and a recent support actually, but it's close to its support. If the support lasts, this momentum will go back up. The momentum support also will last. If this support doesn't last, momentum also will keep on trending downwards, and this might break out instead. And if the support does last, and since it's in the kind of an uptrend with EMA 20-day EMA kind of supporting it for past few days, we have reason to believe that once the support does last, it might break. It is more likely to break out from here, and we might see another two candles like this over here once it breaks out from here. But you want to look at what happens to this level over here for next 2 or 3 trading days, maybe more. And if it doesn't last, if it comes back down, in future you are looking for some trade. Yeah. So going through other charts, yeah, in this case, again, there's this. Yeah, you can see, right? Tata
So the
Chemicals.
starter company.
In Tata Chemicals case, you can see as
Mm-hmm.
and this breakout over here from this resistance has met with pullback way after 2 months. This kind of means if it takes so many months for such a consolidation, that doesn't have a lot of momentum. Even after this consolidation over here, it takes another
That
2 months. It takes another 2
it
months.
does or it doesn't?
It takes another 2 months just to have breakout. This is its consolidation. You want to ride out consolidation, and if you want to accumulate it, you can accumulate your portfolio in this consolidation phase and wait for this such a breakout.
Isn't it that the more time a stock spends in a consolidation phase, the more stronger the breakout will be, or the further the breakout will go?
Yeah, and that's very true. And bigger the base, higher the space. Yeah, that's very true. That's why you also want to see how long the consolidation actually is in the long term. That is, for example, ITC has been consolidating in a downtrend kind of thing for last 3 years. It'll still remain consolidating for some time before having an actual breakout in 310 or 340, which are the all-time high level.
Okay.
In a similar fashion, if Yes Bank manages to pull its stuff together in over the next 5 years or so, it'll have around 8 years or so of consolidation. But that doesn't mean we should look at Yes Bank now. Maybe after 5 years. Yeah. In this case, yeah, it's straight down. While the rest and the support has not broken here, which means there's still chance for it still take to outperform Nifty 500 in the broader market. The resistance has kind of gone down versus the price action. So, for example, if someone has a data portfolio, that doesn't mean he wants to become light on it or something. He has to wait and watch if this support goes off. If it goes off, then yeah, I mean, probably want to stay light on that portfolio.
Okay, okay. So take action only when a level is broken, right? Okay.
Generally, when either level is broken, yeah, or when a trend line is broken, especially the trend line which has been tested a lot of times. The more times a trend line is tested, the more significant it is when it breaks out, either from resistance or support, any which way it breaks out.
Okay, but this is a weekly chart, so wouldn't you say that the relative strength has weakened in HCL?
Yes, it has weakened, definitely. It has weakened. The support is there, but
Okay.
resistance has definitely weakened. Yeah.
Okay. Yeah.
Yeah, Aisha
This
Motors.
is peculiar. I don't know what to make of this.
Yeah, Aisha Motors. Yeah, it's a divergence. Yeah, it's a straight up divergence. However, there's kind of however the Aisha Motors and by extension, whole Nifty auto the auto industry itself has been correcting, has been in a bear market for past 3 years or so. The price action has been lower and lower, both with Maruti, Tata Motors, or whatever. It has been lower and lower. So the whole sector has gone through this large phase of consolidation, which over the next few months, due to fundamental factors or whatever else, they seem to be. Here's the chart for Nifty Auto. Yeah. So for a long time, since April 2018, has broken this level over here. And it's not a failed breakout. It's a real breakout, and went as low as this level over here on 31st March, towards the end of March. That is. So since then, it has been making higher highs until this level over here. So until this level came out, many people were hopeful that this might be start of new bull market, new bull run in the auto sector. And when I analyzed this chart, we were over here. So yeah, I was thinking it's probably a failed breakout, but I wasn't sure back then. Now, of course, I'm quite sure it's a failed breakout, and we still have to look at this level over here. So once this level over here is breached, and that decisively, that would mean that the new bull run for auto sector has actually started. Although I'm quite positive that it will start this year itself. When it will start, we just have to wait and watch.
Arikaji, you said that you look for outperforming stocks. Hello?
Yeah.
Okay, I thought I lost the connection. Why is that? Because what I have observed that the underperforming stocks actually have a lot of, like you say, uh, juice to go up. Like for example, Axis and Bank Nifty. So in that case, it was like Axis was underperforming HDFC and other stocks. But all of a sudden, it had a breakout, at least in the bull run, as the bull run was going. So,
Yeah,
what would you
in
say in
around
that case?
October, November, it had breakout. I remember that. And that's because the whole bank sector itself had breakout back then. Remember, the fundamental factors themselves didn't support Bank Nifty back in May, June. There were a lot of talks of NPAs and even the banking system of totally crashing and whatnot. There's a lot of doomsday posts in reputed journalists like I think Livemint. I don't know exactly remember, but there were opinion op-eds and stuff how the banking system will collapse due to all of this moratorium and all of stuff. But as September came in, as October came in, people started realizing that's not really the case. And as more and more banks, HDFC Bank and whatnot, and even ICICI Bank, which has a lot of consumer base, not a corporate base, consumer base, and they came out with quite good earnings, considerably. Bank Nifty started outperforming Nifty as a whole. So Axis Bank also was part of Nifty, was part of Bank Nifty.
So exactly why, okay, this was a specific case, but in general, why do you choose outperforming stocks over like any other?
Because you want to make more money than the Nifty is providing you. You don't want to put your money into, at least I don't want to put my money into index funds.
Okay, so there's no relation to like the outperforming stock would basically have a later what you could say breakdown.
And
So there's
breakdown.
no logic in that, right?
Mm.
Then there would be a later reversal. That is what I'm. So there's no such logic, right?
The logic is that if a stock is outperforming or if a sector is outperforming, it remains outperforming versus the benchmark for prolonged time. As an example, Bank Nifty is a really good example. For 16 years or so, it has been outperforming Nifty. You see, since the very start of this chart itself, it has been outperforming until this consolidation part because of the big crash in 2008, and then started outperforming again until the COVID crash. And this chart went as low as the high of 2008. So the people who have banks in their portfolio, they got under golden opportunity after some 10 years or something to start accumulating very aggressively. Because as soon as it reaches here and this kind of resistance, it breaks out, Bank Nifty is going to shoot again, just as it had done here, here, even here, here, yeah. Whenever it had big drawdowns, it had just as big of uptrends. Indian banks are basically fundamental to the economy itself. Yeah, getting to other questions. Here's a chart of Tech Mahindra. So in this case, you want to see this resistance over here, right? This resistance zone over here, and when it breaks out, you want to go into that, and you also want to see the support trend line over here. You can see the support trend line. You can imagine that, right?
So, but it has not out. Okay, so outperformance. There was one high in 2015.
It has small rounds of outperformance right here and right here, but for prolonged time, after I think from 15, 16, yeah, after 2015, it has underperformed. TechM has underperformed the broader market. And
So
even in this one,
you would
yeah,
Hmm?
even in this,
You would rather wait for the high. Okay, I'm sorry.
yeah, please continue.
You would you would rather wait for the 2015 high to break out and then get into the stock to outperform the Nifty 500.
Yeah, you're looking for these small resistance like this over here, the small over here. Now recently from here to this small resistance. That's when you want to start accumulating. And over the lifetime of your portfolio, you'll start realizing that these are the best prices that you have over the months and over the years, and your average is like the best kind of. You don't have to suffer through this kind of this drawdowns. And there's also a saying in the market that instead of averaging down, you average up. So this ensures that you average up. And you're using this trend, you can also find out which of the stocks are getting out of their downtrend, the cyclical downtrend.
Can you show us an example
of cyclical downtrend.
Yeah. I mean, the last I checked was all this metal stocks, but then they are in a significant bull run.
So commodities are cyclical by nature. I'm sure everyone knows that. And using that, the fundamental factor about commodity that it's a cyclical in nature. I'm using MCX, the commodity exchange, leading commodity exchange, versus the Nifty midcap, because in it's a midcap company according to the That's the only reason. You can see this uptrend over here and this massive downtrend and serious consolidation. This consolidation is close to support. So you're watching support and you're watching what happens to this consolidation. If it starts shooting back up, if this thing happens, you want to get into this action. If not, if this thing ever happens, you want to stay away from it as much as possible. So you can see this resistance over here. So you're watching. 1 year has happened. It's still consolidating. Nothing happened. You're watching. All of a sudden, you see this shift. This is the uptrend. Again, support. Uptrend again, and the support gets broken in this downtrend. In fashion is it over here. So whenever resistance gets broken, you keep on accumulating, and you make a greater part of your portfolio, your long-term portfolio. That is. For swing trade, of course, when you start seeing this thing going down, especially over here, when this resistance is not taken out, you want to liquidate your position. For positional and swing trading. For long term, you probably want to stay in it for 25, 30 years. But this is not next 2 years, 3 years, doesn't matter. You want to be what matters is what you get, the profit you get in hand. So even right now, there's some stocks which are still in red for me, which I have averaged up recently. But what matters is that what I get in 10 years or 10 or 20 years down the line. It doesn't matter if I'm red right now. What matters is if I'm green later on. So as MCX, as gold and silver started going higher and higher, even copper recently started going higher. M6 started going higher up again. And all the positions and swing traders start getting out of this thing. For long-term people, they just stop and they check and they focus on other parts of the portfolio, whichever the parts there are. And once the bottom is made out, they look back into M6.
Okay, so you'd never exit your long-term portfolio.
If you want to, you sure can. And this over here is quite big drawdown for 3 years. Even this one is for 12 to around 2 years, 3 years. So it's quite big. However, for ultra long time, in my case, like 15, 20 years, I don't want to exit because I know the fundamentals are strong in all of my companies. Plus, the price is really good. Even if it goes as low as 40% from its all-time high, it's still good. Because when I want to exit, I want to exit it like 10x, 20x from its all-time high. Of all-time high when I first started accumulating, that is.
Makes sense.
Yeah, so yeah, Aisha Motors. This is again, yeah, divergence. The price is making higher highs, and indicator over here is not. You also should watch for RSI or any kind of momentum indicator, even momentum itself. For
Yeah, I like that my analysis.
yes, momentum. I don't want to make it too heavy for you guys by explaining what momentum actually is. Uh, yeah. So generally in momentum setting, when it crosses zero, that's a buy signal. So this is 0 over here approximately. So when it crosses that, it's a buy signal. Crosses down here, in this case, it's a sell signal. I'm just giving you a brief of it. There are a lot of, especially in sideways markets, there are a lot of false signals. So you're using Bollinger Bands or other kinds of indicators. You weed out those false signals, either Bollinger Bands or regression lines, any other envelopes, channels, whatever it is. My point is that using this plus the study over here, you want to find out if divergence actually exists. Because remember, relative strength means that the denominator is underperforming, which means all of a sudden in the tail end of January, Jan Feb, Nifty started outperforming Techem. That's the reason.
No,
Yeah, Techem might be okay and all. You should look at the indicator. In this case, there's a clear uptrend over here and resistance here. But the sell signal still hasn't come here, if you notice. Yeah, so the absolute last thing that I probably shouldn't do, but I'll do it anyways because a lot of people ask me this question about open interest. What open interest is and how we can interpret it. So, yeah, where is it? Ahead. This is a good interpretation of that. As if prices are rising and volume is rising with open interest, the new buyers entering the market, it's a really good sign. That way, if everything is falling, there are many people that are getting out of their longs. If prices are rising but other people are falling, then the money is leaving the market. It's getting out of equities into commodities or in different markets or even in bonds. If prices are falling but volume and open interest are rising, there's a lot of short selling, a lot of bears. Yeah, it's kind of simple. Okay. I know it's kind of heavy again. I try to not make it too heavy, but it's that kind of concept.
but the open interest, you were talking about Nifty and Bank Nifty.
Yeah.
Because you mentioned markets, so those are the indices, right?
Hmm.
But you can't see open interest in indices. You have to have futures, right?
For futures only, yeah. It's only for futures. Yeah. Should we wrap up or do we have more questions?
I don't know about others. Uh, could you open up, check my HDFC image, which I sent you, sir?
Okay, just
HDFC Bank. Oh, I sent you the chart on.
yeah,
That one.
yeah, this one, right?
So the resistance still exists, right?
Yeah, resistance still exists. The resistance over here, and this would be your next entry point.
Once it breaks that, right?
Yeah, if it breaks this and if it breaks this one, these are your two entry points for long term. Yeah, for swing,
Okay, so
it's a good one. For swing and position, gap or still good entry points.
they can serve as targets, right?
They can also service targets, that's right. But you should also see momentums of the stocks.
Mm-hmm. Mm-hmm.
Either by
Yeah.
momentum
So
or MACD or whatever else.
okay. Okay.
Yeah.
Yeah, I guess that was all the doubts which I had. So in Tata Chemicals, the chart which you opened, I found the price action to be a lot similar to the relative strength. Does that have any significance, or does that say that the stock is really really good to get in on?
It just means that it's performing in line with the benchmark.
Okay, yeah, makes sense. Shit.
I mean, that's not bad because step one is get out of losers, so get out of underperformers. So you you just finish your step one. Step two is outperformers, of course, but you at least don't have underperformers.
Okay. Okay. How often do you have a portfolio? Do you have two portfolios?
Yes, I just recently got short-term portfolio because I've been losing my salary for intraday.
Okay.
So I don't want to use my salary for that. I just use short-term portfolio, swing trading and positionals for that, using relative strength. And yeah, for long-term, yeah, I use relative strength also.
So yeah, that's what I wanted to ask. So if you want to get in on a swing trading, you would use a daily time frame, right, for the relative strength and other indicators.
Yeah, for positionals and basically for funding my options, for my learning options, I use daily charts.
Yeah. Okay.
Long-term portfolios which I haven't sold yet any of my stocks, and for that I generally use weekly. Sometimes in when Nifty goes down or Nifty 500 or mid cap, one of these three go down, I check the daily charts in case my stocks are doing better or not.
Okay. Makes sense. Makes sense. This is very interesting, but I could only get into RSI. The rotational graphs were too much for me to grasp. Maybe after 2-3 months,
Don't
I
worry,
will.
you can ignore RRG completely and just focus on this.
Hmm.
This might have a lot of legwork, but it's a lot more significant, more versatile.
And what I found was this gives you the pulse of the market, which I was missing from a long time.
Yeah,
I
it
guess a
does.
lot of mentors also said that to me. Energizer and Sexyribbon also told me that. I was looking at daily time frame, but I was not able to catch what the market is doing, how it is behaving. The broader perspective. This is what I was looking for actually.
Yeah, it's really good for that.
The comparative. That's what I mean. This is amazing for me. Yeah, well, those were all my doubts, and I'll keep looking up more stocks for this. And if hopefully you can, get back to me whenever you have time. I'll keep posting them in the channel.
Yeah, sure, no problem.
Okay. Thanks a lot. Thanks a lot for taking the second session.
Always, yeah, always my pleasure. Like it. Yeah, can we wrap up?
Yeah. I mean, I don't have any other doubts. What about others?
Yeah, alright, then we can wrap up. And if anyone has any doubt or any queries, my channel is always open.
Um, Thanks a lot.
Yeah.
Thank you.